Welcome to the Roy Morgan Weekly Update. Last week, ANZ Roy Morgan consumer confidence dropped 1.3 points to 84.5. All interviewing was undertaken before the Melbourne Cup Day and the Reserve Bank's decision to leave interest rates unchanged. The result followed bad news on the economic front, with the ABS reporting a higher than expected inflation reading for the September quarter of 3.2%. A big jump from 2.1% for June. This high inflation reading immediately took interest rate cuts off the table, and in the same week, ANZ Roy Morgan consumer confidence dropped 1.3 points to 84.5. Driving the fall was less confidence about personal financial situations and the Australian economy over the next year. Hardly surprising, given it's now likely there'll be no more interest rate cuts for the foreseeable future. The jump in official ABS inflation also coincided with a sharp rise in the weekly ANZ Roy Morgan inflation expectations, which were up 0.4% to 5.2%. So Australians are now expecting annual inflation of 5.2% each year over the next 2 years. And now to some important Roy Morgan research on the retailing industry on the eve of the peak Christmas season. Online retailers are leading Australia's low price perception shift, with cheap becoming even cheaper. Kmart and Big W continue to lead on low price perception. 58% and 45% of Australians respectively associate these brands with the statement has lower prices. However, over the past few years, most traditional discount retailers have seen declines in that perception, while Amazon, Temu and Shein have recorded gains. The reject shop was down 18 percentage points to 40% since 2020. Big W down 10 percentage points to 45%. Target down 7% to 27%. In contrast though, Amazon is up 7% to 29% in the same period. The entry and rapid growth of Temu and Shein have accelerated this change. Since October 2024, Temu's low price association has risen 7% to 41%. That's surpassing the reject shop. Shein has risen 4 percentage points to 27% over the last year and is now sitting on par with Bunnings and Target for this perception of low prices. Now to the Australian credit card market. Over 1 in 3 Australian credit card holders rely on credit to make ends meet. So Australian credit card holders have higher incomes than non-credit card holders. Their median annual personal income is over $20,000 higher. Nevertheless, 36% of credit card holders leave credit card debt unpaid at the end of each month. Now that equates to an estimated 2.44 million Australians, or 11% of the Australian adult population. Among those who don't pay off their credit card each month, the median amount owed is $1,037. Those with greater ongoing living expenses tend to owe more. For example, there's more owed by mortgage payers. That's $1,342, and renters, $911, than by those who already own their own home outright. For them, the rollover is $787. Importantly, an estimated 423,000 Australians leave an unpaid credit card debt each month of over $5,000. This equates to 2% of Australian adults and 6% of Australian credit card holders. For more information about Australian credit card holders, view the full detailed release on the Roy Morgan website. Now looking across the Tasman to the political situation in New Zealand. And the National-led government has had a boost in October. The governing National holds a slight lead on 32%, just ahead of Labor on 30.5%, both little changed on a month ago. However, the pattern of support for the other parties has given the National-led government a slight edge. the National-led government is up 1% to 49.5%, including support for National 32%, NZ First 9.5% and ACT 8%. Importantly, this is the first time NZ First has been ahead of ACT since the last New Zealand election. In contrast, support for the Labor-led parliamentary opposition is down 2.5% to 45%, including Labor on 30.5%, the Greens on 12%, the Maori Party falling to just 2.5%. If these Roy Morgan results were repeated at next year's election, the National-led government would be re-elected with 63 seats, compared to 57 seats for the parliamentary opposition. The improved result for the National-led government came after the early October decision of the Reserve Bank of New Zealand to cut interest rates by 0.5% to 2.5%, the 8th cut to interest rates in just over a year. Lower interest rates are clearly beneficial to the government, although the political situation in New Zealand remains very close a year before the election. And looking forward to next week, I'll be back to bring you the latest data for consumer confidence, inflation expectations, and business confidence. Thanks for listening.